Hi everyone, my name is Renjiro Arikowans. I'm a student at Mulawarman University, majoring Management English Class 23. In today's video, I'm going to talk about the importance of managing current assets. And here we have a PT Elang Mahkota or MTech to help us analysis of current assets management as our case study. We will discuss why managing cash, account receivable, and inventories is crucial for business operations. Then I'll show you how MTech performs based on its financial data from third quarterly of 2024 and analyze key financial ratios. Why is current assets management important? Managing current assets directly impacts on companies' liquidity and operational efficiency. Cash and cash equivalent. I believe some of you have heard about it before, maybe on social media or financial expert influencers, which state that cash is lifeblood of any business, which is true. Without enough liquidity, companies might struggle to pay employees or suppliers. Then, account receivable. Effective receivable management ensures steady cash flows. Last is inventories. Poor inventory management can lead to high storage costs or missed sales opportunities. I've made a video explanation about it before on my previous video. Having too much cash is not good for your companies, for your business, because it can miss an opportunities to gain more cash. Also, doesn't have enough cash for your company is not good either, because sometimes you need cash for like paying your salaries, run your operations or suppliers. And then poor inventory management can lead to high storage costs or missed sales opportunities. Having less inventories will lead you to miss sales opportunities because sometimes when the demand of your product is increasing significantly but you don't have enough inventory to sell your product, means you cannot provide or fulfill the demand, means you missed sales opportunities. Here is the study case for Elang Mahkota Technology Tbk from its financial position. As a major player in the media and technology sector, MTech must efficiently manage its current assets to maintain daily operations and fund its business growth. Here we take a look their current assets per December 23 is 2.21 trillion in rupiah, and per September 24 it's 7.59 trillion Indonesian rupiah. And then they have their trade receivable, it's same as account receivable, 2.69 trillion per December 23 and 2.99 trillion per September 24. Their inventories also here is 1.29 trillion per December 23 and it's increasing on September 24 to 1.35 trillions. Their total current assets is increasing from December 23, which is 15.82 trillion to 16.02 trillion for September 24. And here's the summary. Next, we going to the ratio analysis. We have a formula here for our ratio analysis. For the current ratio, current assets divided by current liabilities. Quick ratio, current assets minus inventories divided by current liabilities, and net working capital is current assets minus current liabilities, and account receivable turnover and revenue divided by average account receivable. So for the current ratio in 2024, 16.02 trillion divided by current liabilities 3.85 trillion equals to 4.16. And then there's a quick ratio 16.02 trillion minus 1.3 divided by 3.85 equals to 8.8. So I'm sorry, equals 3.8. And there NWC 16.02 minus 3.85 equals 12.717 trillion. And account receivable turnover, it's 8.72 divided by 2.99 trillion plus 2.69 divided by 2 equals 3.05 times. And here's for the summary. And what does that mean? What does 4.16 means? It means that 4.6, a current ratio that Alang Mahkota technology has 4 times more current assets than its short-term liabilities. This is excellent liquidity, showing that Amtech can pay off its short-term obligation comfortably and still have plenty of resources left over. Quick ratio measure how well Amtech can pay its short-term liabilities without relying on inventory. A ratio of 3.8 means Amtech can settle its obligation even if inventory isn't sold immediately, reflecting a strong liquid asset structure. A positive NWC of 12.17 trillion means Amtech has excess funds to support daily operations, invest in growth, or handle unexpected costs. This financial cushion also protects against risk and offers financial flexibility. And receivable turnover 3.05 shows how quickly Amtech collects payment from its customers. At 3.05 times, Amtech collects its receivable every 3 until 4 months, which is reasonable for the media and technology industry with long-term contract. The impact for Alarm Media Technology has excellent liquidity, with both current and quick ratio for exceeding the minimum standard of 1.5. Positive NWC indicates sufficient funds to cover daily operation and financial flexibility. However, the increase in inventories will be monitored to avoid additional cost in the future. For the conclusions, high liquidity ratio ensures the company can easily cover short-term obligations. A large positive NWC provides financial flexibility. Stable accounts receivable turnover reflects effective credit management. Yeah, in conclusion, MTech demonstrates strong current assets management, strong liquidity, equip the company to face financial challenge, stable receivables, management help maintains cash flow even as receivable amounts increase. And then the last one, however, MTech should monitor its growing inventory to avoid potential storage cost or overstock risk. Overall, the company is in an excellent position to sustain operations and support growth.